Welcome all to the Node, your place for interviews, education, and news. I am Mike, aka Veteran Crypto, and was a little bit distracted there for a second, was getting my thoughts together. But I appreciate y'all for showing up. And if you could, on the way in, if you could smash that like button, share us out, and give us a subscribe if you find value in our content, we greatly appreciate it. Here at the Node, we are we are educators. We do not hype, we do not FUD. Everything that we say here, we back with cited sources. We present data, we present where we get our information, and allow you to decide. We do not care what you invest in. It's none of our business. And we are not here to influence you. We are not influencers. We are simply here to present information to you so that you can make an educated choice on what you choose to invest in. So when we talk about a project, like yesterday, we did a deep dive on XRP. We are not here to FUD any project. We are simply presenting facts. If you do not like what you hear, that's fine. You don't have to like it. It doesn't change that it's facts, though, because again, we always cite our sources. And optimally, not always, but optimally, they are always primary sources. So a lot of our information on our deep dive yesterday was from Ripple's own website and Brad Garlinghouse, the CEO's own words. We do not make things up. We do not care about feelings here. David hurts my feelings all the time about error. I hurt David's feelings all the time about correcting him about his definition of revenue.
I don't have feelings, Mike. They're gone.
I know. You're a robot. We all
That's
know
right.
that I created you as an AI.
I will buy the XRP.
That's right. That's right. Yeah. No, and great job last night on the game show with Crux.
Oh, that was fun, man. That was a good time. Yeah, I really enjoyed just having a conversation with those guys, and I hope that there were people who watched it that got some value from it. I think that they probably did. And then at the end there, when I gave that little outro, I mean, look, man, we're all going to make it. I think so anyway. As long as we don't make stupid mistakes.
not everybody's going to make it. Let's be real. Not everybody's.
I want to be positive, Mike. A little bit of positive delusion sometimes I think is okay.
It is. But it's at the same time, people have to understand that and this is, I think, was not just my belief. I mean, we saw kind of this last bull market. It's the rising tide did not float all boats. There was a lot of boats that stayed bottomed out. And I think it's only going to get worse. I think that
it should. It shouldn't be that if Bitcoin rallies, then everything goes up. Because there's a lot of nonsense protocols. And I like the chat up there. There's a lot of nonsense protocols out there, man. So if Bitcoin goes up, I would not expect that, whatever that altcoin is that you're so, gung-ho about, that goes up too. As Benjamin Cowan says, I'm not talking about your altcoin. I'm just saying, whatever that project is, man, you better make sure it meets that trifecta.
Yeah, it's like, I'm sure Ben Cowan, he has a much, much larger audience. It's like, don't kill the messenger. Don't kill, it's like, I no offense, but this is just facts. And that's what I really like about him is that, everything he says is based on, charts and data and, facts. And I respect that. When it comes to, hype and feelings, I just don't feel that it has that there's a place in it unless you are using other people's emotions and, and that hype and people's tendency to be influenced by it to trade short term, because there is value there.
That's a good point. What was the gentleman's name yesterday during the show? I don't recall his name. He was talking about what if coin on Robinhood.
I actually invited him to come on the show.
Yeah, he made some good points about it because it's up today. Yeah, because it's up today another 65%, and it's one of these really small cap meme coins over on Robinhood.
Yeah,
This
yeah.
one is sitting at an $18.4 million market cap, only 560K of liquidity. So very thin. The moment that this thing dumps, it's over. But he made some good points about it, man. He was just
Millie.
basically saying like,
His name is altcoin Millie.
yeah, yeah. So he made some really good points about this. Like, basically, he started off by saying risk management.
Oh, sorry.
Like, you've got to, if you're going to trade meme coins, you have really, really got to manage your risk. And the way that I think about meme coins is that I would expect that I would have many more losers than winners, but that when I have a winner, it is much bigger than all of my losers. So I would expect to have a low win rate, but that when I win, those gains would be much, much bigger than all of my losses. And the
Well,
only
you would
way to
have
do that is you've got to be disciplined, man. And so I think that's basically what Millie was saying yesterday. And it's not easy. Most people fail at that.
because you don't know when the top is in on these meme coins. I mean, years ago, they would go months, they would go weeks or months where they would keep mind share. Now, I mean, you're talking hours. I mean, they move fast. Some of them are sticky, but for the most part, a lot of them they pump in a couple of hours, maybe a day or two, and then they're just gone. So you really have to be disciplined and keep your emotions in check and not think that it's going to go up and to the right forever.
Yeah. And, there are a lot of meme coins launching on Robinhood chain now. If I'm over here on Dex Screener and I just scroll down to the bottom, it looks like, dude, Uniswap is making a killing off of the Robinhood chain right now. So
Oh,
for
I'm sure.
anyone, yeah, for anyone who,
Well, just the volumes, people wanting to swap into them.
oh yeah, and it looks like Uniswap is, maybe they already have or they are about to launch it looks like a token generation platform, kind of like
Oh
Pump Fund.
no!
Yeah, dude.
like
Yeah,
like
well, I
pump.
mean, yeah, well, I mean, look, they're getting a taste of some real money. They're making like 300K a day.
Yeah,
So, and like that's some real revenues, right? And those revenues are flowing back into that Uni token. So the Uni token itself is up like 100% over the last 8 weeks.
yeah.
Those are some pretty sizable gains for a large cap token. But if I'm over here on Dex Screen or taking a look at these tiny, tiny micro cap meme coins, launching on Robinhood, there could be opportunity here because, with these memes, man, like, but, for a lot of these, man, we're talking about 50 baggers, 100 baggers, like we're talking about like, 50, 5,000 X, on some, or 5,000%, excuse me, on some of these. So, I mean, look, you can do extremely well, but it's more likely that you lose all your money. So this is gambling. You got to be careful.
Hey JC, try leaving and coming back if it's buffering bad for you because I'm not having any issues and it doesn't seem like David is.
Nope.
All right. Well, let's jump into a little bit of news before you do some charts. So I was just watching Drew over Blockchain Basement and Matt Malik, and they were talking about Avalanche, and I was trying to get them to mention some things. I'm not a huge Avalanche bull. I think I have just a very very small bag, a couple $100 worth, just in case. But really, the Avalanche chain the tokenomics are terrible, but there is hope. And I hate using that term, but let me show you what I'm talking about. So there was a post that it looks like the Avalanche Foundation has unveiled an economic research agenda focused on strengthening AVAX value accrual through protocol revenue, validator incentives, and potential token burns. This is an if, a maybe, it might happen kind of thing. But this is something to keep an eye on. Not saying go ape into it, but it's something to keep an eye on. We're seeing this with a lot of the Dino tokens. They are catching on to what me and David, and Jeff have been talking about for months now, and it's starting to get a lot of traction. Our trifecta that we always talk about. with value capture. Does the token have value capture? Institutions. I'm seeing stuff on MSNBC and Yahoo Business when they're.
MSNBC. Ah,
I know, but
ah.
I know, but they they get a lot of viewers, and it's a finger on the pulse of where the institution's mind share is.
I don't think they
And
do. I think that a lot of these legacy media outlets, I think that it's a fugazi. I think that all the viewership is on X now.
well, it's the crypto people, the viewership's on X, but TradFi watches these still, and they are talking about these institutions that they're interviewing are talking about the importance of value capture for the tokens, and that's what they're looking at when they're investing in these projects. So I think that these crypto projects are listening, and they have a seat at the table. They have the inside track. They are in constant communication with the banks and institutions because they're trying to get their business. And they if they want those banks and institutions to buy their token and use their network, they need to be incentivized. And I think that's why they're adopting value capture. But I just wanted to point out that potentially AVAX is revamping their tokenomics. Also,
It's about time. So, Mike, I
yeah,
actually just posted, because we ran deep dive research on AVAX Avalanche back on July 7th. So I just reposted that in our community, in the source room at the node.pro. So for anyone who wants to hop in there and learn a little bit more about Avalanche, just go to the node.pro, click on community at the top, and it's right there for you.
absolutely. And something else that I want to point out, there's not a whole lot going on Avalanche, of any size, except for RWAs. Very quietly, Avalanche is number 5 when it comes to distributed, with almost $2 billion, up 40% in the past 30 days, as far as RWA TVL. Now, if you switch over to represented, it pops up to number 3. So it's more than the XRP ledger, more than Solana, more than Ethereum. It's right under Canton and Providence.
So what does that actually mean, Mike? Distributed versus represented. What does that mean? I'm unclear on that.
All right. So distributed is RWA tokens using the blockchain as a distributed layer, enabling on-chain investors to subscribe, hold, and manage assets directly through their own wallets or custodians. So basically self-custody. Represented. This is RWA tokens using the blockchain as a record-keeping layer, enhancing transparency, reconciliation, and operational efficiency without enabling on-chain investor transfer or distribution. So basically, like the institutional custody. So that's why Canton, leads the way with that. Is because it's most of it is, like right now, is Broadridge. That's not retail. That's self-custody. So that's just kind of gives you an idea of what each of these are.
Can you click on distributed once more?
Yeah.
Okay. And then can you hover over the definition of distributed again?
Yeah.
Okay. So RWA tokens using the blockchain as a distribution layer. Okay. I understand. Got it. All right. So this makes sense. ETH sitting at 17 billion. And where's Canton here? Because isn't I thought that I thought that those RWAs, although that repo volume, I thought that was actually using the Canton Network as the distribution layer, not just as a representation. Because a record keeping layer, I still am a little bit unclear. What does a record keeping layer mean? What does that mean?
And that's something that we can dive deeper into, is this distributed and represented. Maybe we can do not a full deep dive. I don't think it needs a full deep dive, but do a little bit of a deep dive on it. Or if you want to look it up now, I'll go over some other news. But no, that would be interesting to know, because when Canton first launched, RWA.xyz didn't have distributed and represented. It was all on one, and that's how I found it. Like the day that it popped up on here, all of a sudden Ethereum was like number 3, and Providence and Canton was number 1 and number 2. and by a large margin. It was at the time it was like 400 billion on Canton, and and it was less. It was like 15 or 10 or something like that billion on Ethereum. So that made me take notice, and that's why I started diving into Canton. In fact, we were one of the first channels that started talking about Canton, and one of the first interviews, with the Canton team was Shaw. He was gracious enough to come on the show. So and there's other channels out there now that are very a lot more steeped in the Canton knowledge. Like one is a friend of the show, Scott over at I always forget the name.
Longview Compute.
Longview Compute. That guy is the subject matter expert when it comes to Canton. He's one of the few that understand it better than we do. So if you want to learn more about the Canton Network, I highly suggest you check him out.
So I got a definition here: the difference between distributed and represented RWAs, according to RWA.xyz.
What do you got?
So there are two specific criteria here that matter. Number one, can the token leave the issuer's proprietary platform into an external wallet? That's number one.
Yep.
Number two is, can holders transfer the token peer-to-peer between wallets? So distributed RWAs, these are quote unquote open assets. The rule is that an asset must pass both criteria, number one and number two. So requiring KYC or wallet whitelisting, that doesn't disqualify an asset as long as cleared wallets are able to transfer it peer-to-peer. So the blockchain's role here is that it functions as a global distribution and capital formation channel. And so this matters because these assets, they act like crypto native tokens. So investors can hold them in self-custody wallets, interact with supported protocols, and potentially use them as collateral in DeFi. So this is, interoperability, global investor reach. And an example of this would be something like BlackRock's Biddle Fund. So these represented RWAs are quote unquote closed assets. So the rule here, it fails at least one of those first two criteria, meaning the token cannot leave the issuer's platform or cannot be transferred peer-to-peer. Got it. So that means that distributed is like open RWAs and represented is like closed.
DeFi. It's basically DeFi, yeah. And represented is more TradFi.
Yeah, so I would say that distributed is more like permissionless, and represented is more like KWC AML or KYC AML type stuff. Yeah,
I would say that would be pretty accurate.
Huh? Interesting. That makes sense then. That's why Canton is just crushing it on the represented side, and that's also why Ethereum is crushing it on the distributed side.
Yeah,
that makes sense now. I get it now.
No, absolutely. All right.
I'm leering. I'm doing leering.
You know what? That's why we're here. I mean, we're sharing our journey as this ecosystem evolves. I mean, just like the rest of you. We're not ever going to pretend like we know something. If we don't know something, we're going to look it up and we're going to learn with you, and we're going to all learn together. So, that's why we're here. We do not FUD. We do not hype. We are simply here to state facts and data. And what you do with that is up to you. And we're not going to pull punches. Sometimes the stuff that we say might hurt your feelings about some of the assets that you
own. That's so sad.
No, but it's David hurts my feelings all the time if I had them, when it comes to Arrow. That's why we're here, though, is we're here to challenge each other to learn more and dig deeper, especially on stuff we're bullish on, to keep us from getting into that confirmation bias, those echo chambers that we've all, if you've been in crypto for more than a day, you've fallen victim to it. You go out and look for things that make you feel good that you bought an asset. You're not going to go look for things. It's not somebody's natural inclination to go and look for things that make them look stupid.
What you should be doing is, when you form a hypothesis, you should try to disprove your investment hypothesis. And that means you should seek out information that runs contrary to whatever your belief is. And that's exactly what a lot of people in these overzealous groups of, whatever you want to call them, a lot of people don't do that. A lot of people instead, when they're presented with information that runs contrary to what they believe, they just get dug in more and more deeply into those false beliefs, and then they lash out and start making personal attacks, and that's when it gets really toxic. But we see that a lot, man.
Well, and to be honest, I think that we're gonna limit the amount of mind share that we give to that in the chat, because I think it takes away from
It really does. Yeah.
Because if somebody wants to come in the chat and they want to post some links and stuff like that to some good information,
awesome,
absolutely.
Yeah.
If you want to prove us wrong, please
do.
Welcome that. We welcome that. If we are wrong about something, please correct us. But that being said, all right, what else we got here? Let's pop this up real quick. So it looks like Camborsa now supports 3 new networks. We got Base, BNB Chain, and Arbitrum. So now you can deposit, withdraw, and trade across more chains all in one interface. We've done a deep dive on Camborsa. It's a protocol on Canton, and it's looking to be, and we're starting to see a pattern here. Arbitrum, Base, BNB, Ethereum, and Canton. I keep on seeing this interoperability that it seems to be the focus of this new hybrid DeFi TradFi. There's certain chains that these projects are focused on, and it just seems like the same the usual suspects when it comes to what networks that they're focused on ensuring that there's interoperability with.
Yeah, well, I mean, look, Camborsa looks really cool, but oh my God, DC and Prey, we love you, bro. Good luck to you. So the thing with Camborsa though, man, is that you can't really use it yet, can you? I mean, I know that you can. It looks like you can deposit. It looks like you can trade, but I wasn't able to see any of the important metrics that I would need to be able to see before placing a trade. So when you click trade now there, Mike, and then you go and you take a look at the front end of this. So if you, I don't think that you need to log in. I think that you can actually close that. You can probably get in there without having to log in first. So yeah, authorize app, I guess. So there we go. So now that you're in, you see, what I'm always looking for is open interest and volume. And I don't see that anywhere here in their front end. So, I mean, maybe if you change the market from SpaceX to like Bitcoin or something, or change it to maybe CC, see if you can just trade CC. So even on the Bitcoin market, this should be one of the most liquid markets, and yet I don't see any of the important information. Now you see that down there on the bottom right, Mike, of your screen, where it shows funding. I don't understand how they can give you a funding rate or a funding fee, they call it here. I don't understand how they can give you that without also showing open interest and volume, and how many traders are long, how many traders are short, open interest on each side of the market. So how are they calculating a funding rate? It's just kind of I think that this is real. I think that this protocol is legit, but maybe it's just too
early.
New. Yeah, too early. I don't know.
I mean, the data has to be there in the background. It's just a matter of if it's being displayed. And I would think that, I would hope, maybe we need to reach out. I need to see if we can get Camborsa on and, and see if we can, get them to kind of give us a little bit of a rundown of their roadmap, the roadmap, and milestones of, functionality. And UI UX that they plan on doing with this. Because I mean, I'd like where they're going with it. I'd like the interoperability. I like that it's on Canton. the more usage that there is, if it's on the Canton network, it contributes to the burn. But like you said, there's certain data that traders are going to want to see. Professional traders are going to want to see, and this currently doesn't have it.
Yeah, I think that I want to be a little bit generous here because I believe that this is a legitimate protocol. So maybe it's just a little bit too soon. Maybe that's what's going on here.
Yeah. No, and like I said, I mean, again, we're very bullish on Canton. I'm very bullish on a lot of these projects that are launching on it, but we're going to call it like we see it. It's if something is found lacking, we're gonna point it out. It's that's why we're here, is to poke holes in things and just give information. All right.
100%.
Well, next up, what do we got? So you know what? I want to spend the next 30 minutes and just do a quick side by side of XRP and Canton. So just to kind of give people an idea of why it is that, or if there is a chance that Canton and the CC coin could potentially flip XRP, Ripple's XRP, and why, me personally, full disclosure, I feel like that it could, just in the way that the pace at which the networks are growing, adoption, tokenomics, value capture, all those things that we, fees and revenue being generated, those are the data points that I'm looking at. And so let's kind of see, how they pan out. So architectural and purpose comparison. So the primary focus. So Canton is a privacy-centric enterprise application, interoperability, atomic transactions, and asset tokenization, RWAs. Ripple is focused on cross-border payments, cross-currency liquidity bridging, and enterprise cross-border settlement. The network architecture, Canton is a subnet architecture, has a global synchronizer, connects private, siloed networks. So it's that's its whole focus is allowing institutions to stay private and choose what information that they want to share as far as transactions and stuff like that. And the XRP ledger is a single distributed ledger backed by the Ripple protocol consensus algorithm, and it's public. It's a public ledger. All transactions are visible on chain to all participants. Institutions don't like that. Privacy model, Canton, the sub-transaction privacy by default. Data shared on a strict need-to-know basis via the DAML, the smart contract, programming. Native asset, CC for Canton, XRP for Ripple, or the XRPL.
For the XRPL, yeah.
Let's see. Adoption and institutional traction. So Canton, the target audience, regulated tier 1 capital markets, custodians, primary market issuers, and settlement houses. So key ecosystem players. Production use cases involve institutions like Broadridge, the DTCC, JP Morgan, HSBC, Goldman Sachs, and Euroclear. They're all running private subnets, but those subnets are called, what were they called again?
Mainnet extensions, I think.
Mainnet extensions. And those are going to start being charged fees, which contribute to the Canton burn. And they all synchronize over Canton. On-chain scale handles institutional U.S. Treasury repo trades exceeding $280 billion daily. And
that's a lot.
Yes. And tokenized security settlement with the DTCC. That they did a pilot launch, not too long ago, and they're doing a full launch in October if all goes well. Total on-chain asset representation exceeds $6 trillion. Daily transaction count averages from 600,000 to 900,000 or more across synchronized institutional rails. Ripple and XRP. Target audience, cross-border payment providers, remitters, banks, central banks, the key ecosystem players, financial institutions, money transfer operators, for example, SBI Remit and Trenglo, the banks utilizing Ripple payments, formerly ODL, on-chain scale. The XRP ledger handles approximately 1 million to 2 million daily transactions, over 60 billion plus XRP in circulation supply, with heavy exchange retail liquidity and global exchange listings following the SEC litigation resolution. That's the court case. Network fees and revenue generation. Fee calculation. Users pay sequencing traffic fees when synchronizing state across the what do you call them again? I always
the mainnet extensions.
Mainnet extensions. I'm going to have to write that down. Via the global synchronizer. Fees are determined based on transaction payload size and execution complexity. So the fees scale based off of those two factors. Fee destination. Fees are paid in CC and 100% are burned permanently from circulation. Network revenue generates 1.5 to 1.7 currently daily in network fees. This creates direct burn pressure on CC
1.5 to 1.7 million, right?
per day. Yes.
Yeah, $1 million per day.
Yes.
Yeah.
So, and that's based purely on institutional traffic volume. It's been as high as 3 million a day. Enterprise revenue. Enterprise application providers build private services and can charge service fees in CC or fiat, retaining revenue at the app tier.
Oh,
Ripple
look at
and
this. Maximus Crypto. You see this, Mike, in the chat?
Oh,
Oh,
dude.
that's so cool, man. Thank you.
I appreciate you, brother.
Much appreciated. Amazing.
We need to have him on the show sometime.
Yeah. So he says, David, thanks for joining us last night. Appreciate you and the Node Network. Looking forward to joining you guys sometime next week. Thank you as well, Mike. And XRP does have confidential MPTs. Mike, what is an MPT?
Honestly, I don't know. That's something that I haven't heard of, and something he could probably teach us. I would love to have, because I know he's an XRP bull. I'd love to have him come on and present a more bullish stance on XRP.
MPT. I'm finding out right now what a confidential MPT is.
All right, so I'll keep reading this until you find that. So it looks like it says.
Oh, okay. So so Mike, it's a confidential MPT on the XRP ledger is a multi-purpose token. So a XRP ledger MPT token, I guess it's governed by a proposal XLS 96, and it's supposed to bring institutional grade privacy to tokenized assets on the XRP ledger. So apparently these standard MPTs, not confidential, there are standard MPTs too, it looks like. They allow issuers to create high efficiency fungible tokens with built-in compliance rules, so such as supply caps, freeze controls, and clawbacks. So standard transactions expose wallet balances and transfer amounts on the XRP public ledger. But a confidential MPT solves this by shielding transaction values while preserving compliance and public supply auditability. Huh. Very interesting.
I see.
There we go.
We learned something today. I
learn something new every day.
Heard of MPTs. Again, we're not pretending like we know everything about these projects. We're just presenting the information that we're able to find and allowing you to make your own choices. But I'm going to integrate that knowledge into my thesis on XRP.
And you see what Maximus just said there? He said that he came into Canton at around 7 cents. If Canton, right? So that was a recent, like I would call that an intermediate term low. But if Canton makes a move back below 10 cents, then he says he's backing up the truck, but not financial advice. So, hey, man, I mean, I like CC.
I currently have a long in on CC. You can see it. I'm actually, I've been up as high as $25. Now I'm $2.63 in the hole. So
What did I tell you yesterday, Mike?
You know
I
what?
told you,
Like I
man.
said,
Quit those
I'm a
games.
DJ. I'm a
Yeah,
DJ on my longs and shorts when I do choose to do them. All right.
yeah.
So let's keep going here. So network revenue for Ripple and XRP due to extremely low micro fees. This was one of the selling points about XRP is cheap fees.
But it's
Because
also a
it was
problem, though.
well, it is, but and I'll get to
Yeah.
that. But this was a selling point, and why I was so bullish on it compared to at the time ETH. Those that have been around a while remember when ETH fees, when the network's busy, you might have to pay $100 or more in gas fees just to perform a transaction. And before I learned that, I when I was trading or sheep, when I was messing around with sheep, when I first got into crypto, I didn't know what gas fees were, and so I was trying to move it to self custody and do all this different stuff, and I was like chewing up all my profits with trying to move it around. So anyway, just wanted to share that.
And
But
you see what Maximus is saying, that critical thinking and proper education is super important in this space. He is absolutely right. It's so lacking. And so I think that what we do every day, I hope, provides a lot of value to everyone who watches. And then you see what Green Day Profits is saying. Are you more bullish on Canton or Arrow?
you
What do you think,
bastard,
Mike?
Green
What do
Day
you think?
profits, you bastard! How dare you?
I don't know,
Make,
man.
make me choose between my two ladies. How dare you?
I mean, look,
Um,
so here's the thing, Mike. With that uni fee switch, I would not be surprised to see a lot of volume move on over to Aerodrome at some point, but we need more clarity on what those new
yes,
tokenomics are going to look like.
I
And
want to
to
see
be
more
honest,
clarity, not just on the token and the tokenomics, but the new platform.
yeah, yeah, 100%.
All right,
And then,
so I'm going to
I
answer the
see,
question.
that dude, Aerodrome Alexander or Wagme Alexander.
Yeah,
I mean, I would love for him to start posting about what the new protocol is going to look like, rather than just kind of shit posting about Uni's fee switch. Like, I want to see details, man.
yeah, no, and again, Arrow is my largest holding. I'm a degen on Arrow, but I agree. I'll be the first one to point it out that they do a terrible job. They were supposed to launch the new platform in July, and then just very sneakily on a very obscure post, they're like, oh yeah, now it's September,
I
and
know.
they still haven't released the full details about the tokenomics. They haven't released the full details about the functionality, the UX UI, user experience, user interface, and a lot of the functionality that's going to be. They've released some, but not all. It's like I'm
It's like,
sure they
why?
know
Like, if
exactly.
it's launching in September, isn't it done? Like, it should be done. So,
Well,
like,
at least what they're working on. I mean,
right.
they should have a roadmap of from a project management standpoint. The devs have things that they're working on, so they know if it's going to have institutional vaults. They know if it's going to have if you're going to be able to harvest your yield from your stakes. The
So
VE
why
arrow
can't
are
they come out and say that then? Right?
exactly. And
Yeah.
again, I'm a Super Bowl on Arrow, and it's my largest holding. But I'm going to point out when I see something of concern.
I think that Arrow could do extremely well. It's just that I haven't had a chance to spend the time yet to model the emissions versus that lock rate. So as long as more Arrow is being locked than minted in emissions to LPs and lockers, well, then I think the token could perform extremely well. But
Yeah,
without knowing what the new tokenomics and protocol is really going to look like, then it's
you
like,
don't.
okay, I got to wait because it would be a
Yeah,
waste of my time to model what's going on now.
well, because you can only model it if you have the factors, and and then with that you can model. Okay, what are the chances it's going to be deflationary, or is it just going to be inflationary? Because that's the model that Hype uses. Is they have the tokens, and as well. There's a lot of transactions and fees generated. Then all of those fees go to burning the hype token, which has led to it being deflationary, which has led to it going up and to the right, while the rest of the market has been down to the right, BTC included. Good. If you look at these markets, the ones that are performing well are the TRX, hype.
So Mike, your audio is cutting out pretty bad here. Yeah, but so what I see is that there are only a handful of protocols and coins that actually meet our trifecta. And the trifecta is really, really simple. It's, are there users and user adoption? You need real product market fit to get users, right? And then after you know that there are users on that protocol, or users of a chain, or users, people who use a token, okay, great. But they need to drive revenues too on that protocol or chain, or for that token. And so after there are users and those users drive revenues, well, then here's the last piece, and I think the most important piece. You need real value capture. So if you're holding that token and there are users who drive revenues, then you need to get those revenues need to accrue to you, the token holder, in some way. And if they don't, then you're basically just holding some type of a meme coin. A great example of that is Ondo. Ondo is a governance token. And it's just so messed up because oh my God, $100.
Holy shit. Dude.
Wow. Thank you, Maximus. He said, here, put that back up on the screen, Mike. I want to see this. So he said, I heard you're both not fans of XRP, but that isn't the point. The point is to have two different perspectives while being respectable. Attack the message, not the messenger. Appreciate your insights. Keep up the great work. I have to take off for now, but looking forward to next week. Me too. Maximus, thank you so much. Very generous of you. Much appreciated. And next week, Maximus, what we're going to do...
Reach out to me on X. We would enjoy having you on the show, because
that'd really be awesome.
It's not that we're not fans of XRP. It's just I don't see the value in holding the token, other than speculative moves, because of the trifecta. That is how we are judging tokens and projects here. Not to say you can't make money on XRP. I think that if you're buying XRP right now at $1, you're going to make money. It's just, but it's
I don't know. That's a difficult statement for me to be able to make.
I think that just out of pure mind share and the amount of attention that it gets, that the price will go up at some point.
I really don't agree, Mike. I think that when I take a look at our trifecta, and we're talking about the XRP coin within that XRP ledger, XRP ledger ecosystem. Okay, so the XRP coin itself, are there users on the XRP ledger? Not really. Does it generate real revenue? Not really. And is there value capture back to the XRP coin? No, not really. So for me, that makes me think, okay, if I'm going to buy XRP with the expectation of being able to make money on the thing, I'm basically gambling. I'm gambling, and I've got to hope that the mind share is going to drive that number go up. And
that's 95% or more of crypto, though.
It is. But that's why I would avoid 95% or more of crypto, Like, I don't want anything to do with a gambling bet unless it's like a small portion of my portfolio and I go into it knowing that I'm gambling, knowing that it's a lottery ticket type play. But if I'm going to take on that lottery ticket type play, Mike, I need to be able to do 100 bagger. And I don't see XRP putting in 100x.
Something that I'll agree with you on is if you're going to gamble, there's much better gambles because XRP, the market cap is almost $70 billion. It has a lot less upside than something like we're talking about a side-by-side comparison with Canton. There's a lot more adoption going on with Canton. There's a lot more fees and revenue being generated. It's a lot lower market cap. And the tokenomics are far superior.
You're absolutely right. You're absolutely right. And so here's the thing that I would say about Ripple Labs. Now, Ripple Labs is a fintech. If the XRP coin was something more akin to equity in Ripple Labs, that completely changes the game.
Absolutely.
But it's
Absolutely.
not. That's not what it
No.
is, though. It's not. And you know, it was
There was a whole court case about it that went on for years.
right. You know, so I'm just thinking to myself, like, I want to be able to go in eyes open, right?
Yes.
So if I buy XRP, I've got to know exactly what it is that I'm buying. And, you know, I think that it's something with very few users that don't drive revenues and where those revenues don't accrue to the token very well. So it doesn't meet our trifecta.
Should we do this as a tribute to Max? You know, the tip, the tip that he gave us.
I think we should. I think we should. That'd be awesome. Yeah, we should totally do that. And then what we'll do is we'll buy the XRP with it, and then I'll put on the website because we've got a Coinbase Prime account for the business. Yeah. So we can buy the XRP in the Coinbase Prime account, and then I can put like a little link to it up on the website so that people can track the performance of it.
Yeah, maybe. I think that'd be kind of fun.
Yeah, that'd be cool.
So let's continue on. So, and I'm going to leave the trifecta up in case anybody wants to screenshot that. And it's free. You can screenshot it for free. So any of you that just joined us, if you could, on the way in, please like and share this. Subscribe if you're finding value here. If you find us entertaining, you're finding value here. We genuinely just want to educate people. We are never paid. We do not accept payment for any of our interviews. We don't do affiliate links. We are paid in no way whatsoever by any third parties for any information that you see here. Me, David, and Jeff pay for all of this out of our own pocket. We don't want you to think that at any point that we are influenced in any way. And it allows us the flexibility to give you the full picture. We're not incentivized to paint a certain picture. So if you could, please help us grow and get this information out there. So with that, the network revenue. So due to extremely low micro fees, total daily transaction fee burn on the XRPL is modest, typically a few hundred to a few $1,000s daily, as the network prioritizes cheap throughput over revenue generation. Side-by-side comparison with Canton, where it's making multi-millions of dollars in fees each day, 100% of which is burned. Whereas with XRP, it's only making a few hundred to a few $1,000s, and only like 0.00001 is being burned, because that's the fee on a transaction. Now, it's not apples to apples because XRP does have a fixed supply, whereas Canton, it is always minting new tokens. So keep that in mind as well.
Did you see what Crypto Dave _Soul said? He said, that's the insulting part for me. Why would I buy XRP but not benefit from Ripple Labs' success? And, that's my whole problem with it. Dude, I just need to be able to understand what it is that I'm buying when I buy these digital assets. They are not equities. They're just, you're not buying stock. It's not what you're buying. So, yeah, you got to understand what you're buying.
What's the value proposition? What is it? Why should I buy the token?
Right.
And if it's just in hopes that, if the company does well, that more people are going to buy the token and make the token price go up so that you can sell because you bought at a cheaper price. I mean, that's fine. If that's how you invest, we're not saying that you're stupid or that's wrong. I'm just what I'm proposing here is there's much smaller market cap plays that have a lot more that potentially will drive the price of the token up than just simply hoping that you can sell at a higher price because of mind share.
Michael, so let's be completely open about this. Bitcoin doesn't exactly satisfy this trifecta very well either. Okay,
hey, go back and watch our deep dive on Bitcoin and Ethereum. And we beat the hell out of them.
No,
And
Ethereum
David's a
Ethereum
huge
is a little
bull on
bit better. Oh, I'm a huge Bitcoin bull. In
it. Yeah.
fact, later on today, you know what I'm going to be doing? I'm going to be spray painting my headphones, bro.
Oh,
So
you're gonna make it Bitcoin?
yeah, I'm going to make them Bitcoin orange with a Bitcoin B in white on the side. It's going to look really cool.
I'm actually thinking at the new property that I bought, where we're building out that adventure adventure guide company, doing the kayaking and hunting and fishing and all that. The lodge that we're building, I'm actually thinking about building a small studio in it.
It's going to be great. That's going to be awesome. Yeah,
No, it's going to be a lot of fun. And then of course
yeah.
we're getting all the airsoft guns, and I'm going to build like a CQB
A
shoot
kill
house.
house. Yeah.
Yeah, so it's going to be a fun business.
Oh,
So
dude,
yeah,
I can't wait.
that's what I'm doing all weekend. Is I'm actually clearing the property because it's like 30 acres. So
You got to
all
clear
right,
that back 40.
yeah, I do. All right. Enterprise revenue. Ripple, the private entity, generates software licensing, custody, and transaction markup revenue from its institutional enterprise products like Ripple Prime, which is separate from fee accrual of the XRP ledger itself. So that's important to understand that they make profit as they should. They're a business providing goods and services, but there is no connection with those profits with the XRPL or XRP. The only way that XRP directly draws value from the XRPL is through gas fees, and in very specific use cases when it comes to transfers, cross-border payments, and in fiat currencies. So it's important to understand these nuances when you're investing in these assets. I'm appreciating
Yeah,
the chat today. The
me
chat is
too.
being very, very open-minded, and that's very important.
It really is. Especially when you compare it to yesterday when it was almost vitriolic. I'm very, very happy that,
Yeah,
look, we're just trying to put out information.
yeah.
It's just about education. And we don't know everything, man. It's impossible to know all sorts of stuff about all this. We're just learning right along with you guys. So, whenever we get something wrong, please point it out to us. Hop into the Node.pro community. It's
Yeah.
free. Join the community. Whenever we make a mistake, point it out to us in the community. We want to learn along with you.
David, could you drop the link to our YouTube channel in chat? We have a massive amount of people watching on X, and I really want them to come over here and get in the chat and hit us with questions. If we're wrong about something, please correct us. That's what we're about here. So if you're on X, pop over to our YouTube channel because we would love to hear from you.
Sure, there it is.
Thank you, David. Let's go. So it looks like Canton is an activity-driven model, no pre-mine and no VC. That's something else about Canton. It was a fair launch. 100% of all of the tokens that were in existence at the time went into circulation. The team, VCs, all of that kept no tokens. It was 100% fair launch. So
That's important.
very different than XRP, where a huge amount are held in escrow that Ripple each month, 1 billion XRP tokens are unlocked monthly that they can choose, and sometimes they do, to relock or sell so that they can pay for operational costs.
And so, how do we know this? How do we know these data, right? It's
Yes.
because of that court case and because of statements by the executive team at Ripple Labs. So it's not like we're not making this up. Like,
No.
you can go and you can see the primary source documentation that we use in our Intel library deep dives on XRP Ledger and the XRP coin. So these are primary sources, man. These come from
Oh,
court documents.
no,
So this stuff is
there's
real.
video. There's video of Brad Garlinghouse saying exactly what I just stated, that they sell XRP to, for their acquisitions, for like Medico, when they bought Medico, their offices in San Francisco and New York, a good portion Actually, I forget the exact quote, but basically, the reason they're able to stay in business currently, or at the time of that interview, I'll say,
Right.
um, it was from the selling of the XRP token. So,
And how does that make you feel, man? If you're holding XRP and you know that Ripple Labs every month on the first of every month is selling XRP on your head to fund its business operations, how does that make you feel? That wouldn't make me feel very good if I were an XRP token holder, which I am not. But we're about to be with that super chat from Maximus. So
no,
hey, man, I hope
and
that it
again,
works. I hope that it works for everyone who holds XRP. I really, really do. I want you guys to make all the money in the world. I really do. But we're pointing out facts about this project. That's all we're doing.
yeah. All right. So let's get into the tokenomics and value capture, and I'm going to try to get through all this because I want to do our deep dives that we have today. But the initial allocation, 100 billion fixed supply at inception, and 55% of that is allocated to Ripple Labs, placed into the time-bound escrow, releasing 1 billion XRP monthly, like I just said. And for full transparency, I've said this many times. I was in the top 2% of XRP holders. I had over 40,000 XRP for like 5 years. And I decided to sell at $2, when we got that pump. I didn't sell the top. I'm not going to pretend like I did, but I made a nice profit. My average entry was in the low 30-cent range. But the reason I sold is because the thesis changed. Is because of the launch of RLUSD, I felt took away from the use case of the XRP token because it's used as for that to move. Got a woodpecker.
Yeah. So, Mike, that whole use case, I never believed in that use case at all. I always thought that it was fundamentally flawed just on its face. Like, why in the world
exactly?
would? Well, because if I want to swap asset A for asset B, I don't want to use a volatile like bridge asset to facilitate that transaction. That's just like introducing risk when you don't need to introduce risk. It doesn't make any sense.
And I would tend to agree. And I've stated before. I mean, if you're moving, what is it, $1 billion, and the price moves even 1% during that transaction,
1% would be a massive move.
Well, isn't it like $10 million?
Yes, it is. But let's say that it moves 0.1%. That's still $1 million. Let's say that it moves 1 basis point. That's still $100,000. Like, that is a massive risk that you're taking. And that's why no one uses it, because it doesn't make sense.
And I think that's why it's used for RWAs. It's used very heavily, in RWAs, because those have a fixed value. If it's just being used as a ledger to record ownership of tokenized assets and the movement of those, then absolutely, I see a strong use case for mini blockchains in that regard. But for the movement of fiat and things like that, I think RLUSD.
Dude, this guy Moneymaker XRP, I love it when he shows up in the chat, man. XRP is living rent free in my head, brother. You better believe it. I think about XRP when I go to sleep at night. No, I don't. Oh,
well,
man.
You know what? It's because it's a perfect example of a large market cap that has its use cases, but it is fundamentally flawed in a lot of ways. But
I don't really see the use case. That's the, you see, when I think about the blockchain wars that I believe that we're living through right now, I always think back to in the 1980s and the 1990s, the operating system wars and the browser wars. And what happened back then was winner take most. And so I think that that's what's going to happen here in the blockchain wars that we're living through now. I think that it's going to end up being a situation where winner take most. And I just don't see how XRPL can win.
let me present the data that supports my thesis. So if you look at distributed, then you don't see XRP, or the XRPL. But if you go to represented, it's number 4 with over $4 billion and 364 managers.
So,
So
Mike, can you click through to that and get a little bit more information on what that
unfortunately,
4.1
no.
billion is?
Now you have to pay. And I'm not going to pay for
You,
that.
you know what I think that is, Mike? I think it's RLUSD. I think that's what it is.
No, a lot of it is, but that's my point. Is that I think that RLUSD is going to be that vehicle for liquidity, and that the tokenized real world assets that are on chain are going to be the value that's on the XRPL, and that has little or no bearing on the value of XRP.
Right. And another thing that I don't understand about XRPL is, Ripple Labs, the company, and the XRP ledger has existed forever. It's one of the
Yeah.
oldest projects in crypto. Why has it taken them over a decade to ship anything of value? Like RLUSD is really their only product on chain. Why
1
is that
billion.
taking so long?
RLUSD TVL is currently just over 1 billion.
So if RLUSD really is their on-chain product, well then what's taking so long for them to ship any other products? Like why they have no clarity. Moneymaker XRP says, well, you see, that's another problem for me is that it always seems to be that there's always some reason why they can't ship. Like they can't ship because of this reason or because of that reason. And then it comes down to oh, well, if this happens, then number go up. And none of it's ever really been real. So there's no reason why they couldn't ship a DEX that actually works. There's no reason why they couldn't ship an easy to use wallet that allows retail to onboard. Like they can ship this stuff, man.
Yeah.
Why aren't
No,
they?
and they have clarity. They didn't for years because of the court case, but for years now they've had clarity. They could have been building that whole time and been launching stuff. But let me do the key takeaways. Let's get into the deep dives.
Sweet.
So the key takeaways: adoption target. Canton Network focuses on capital markets, RWAs, and institutional synchronization across private financial subnets. Ripple focuses on cross-border liquidity, payments, and enterprise remittance corridors. Fee generation. Canton generates substantially higher total daily fee revenue due to high-value batch transaction fees burned on its global synchronizer. XRPL prioritizes ultra-cheap transactions, 0.0002 is the cost, like cents. It prioritizing high-speed volume over direct network fee revenue. Token accrual. Canton Coin uses a dynamic burn and mint equilibrium directly tied to on-chain workload. And we always point out, currently, the mint outpaces the burn for Canton Network.
Right, it's still inflationary. Yeah.
It is still inflationary. We're going to be real here. As bullish as I am about Canton and the potential I see in the future, it is still inflationary. That is not a good thing.
Right.
All right. And then XRP functions as a liquidity bridge asset in some cases, backed by a fixed supply dynamics and market maker order books. So that's all of it in a nutshell. So final thoughts on all of this, David, before we get into the deep dives.
Sure. So, I always see people posting about what needs to happen for Ripple Labs before number can go up for the XRP token or before they can ship something of value. And I just don't buy it, man. I think that if they really wanted to ship something like a DEX that works, a wallet that works, on-chain dApps that work, dude, what are they waiting for? They're dumping XRP every year, every month. They've got plenty of cash to be able to hire developers to build this stuff. What are they waiting for? Why? Why aren't they shipping anything?
Well,
and why did it take them so long to ship RLUSD? That chain didn't really do anything until RLUSD came along.
Yeah.
So there's just no excuse in my book anymore for them not to ship.
Well, and my final thoughts with with the clarity is, why is Canton launching all the stuff that they are? Well, why is all these other projects, ETH and all these other projects, all launching stuff? They have the same amount of clarity as XRP. Actually, some of them less. XRP was on that list that the SEC, what'd you call it, David?
The Sweet 16.
Yeah, the Sweet 16. Canton and a lot of other projects weren't on that. They don't have that level of clarity. They're still launching, products and services and things like that. So I don't buy the clarity thing. I mean, that was the narrative I heard when I was a holder, and that the court case, when it was over, that the token was going to pump and it didn't. And that's what got me doing deep dives initially. And why is it that that it didn't pump? And that's what started me on my journey to really dig deep into these projects, because I was invested in all the ISO tokens. I had HBAR, XLM, XRP, Quant, all the usual suspects, and I ended up selling them all.
Because once you start doing deep dive research on those ISO coins, you realize that they don't meet our trifecta at all. And, it seems like it's mostly hype that has kept them afloat. And most of those coins, I think all of those coins, have performed very poorly. So, but Mike, I've got the Node.pro pulled up here on my screen share. So I'm ready to rock and roll, and we can take a look at that deep dive research. So for anyone who's getting some value from
really quick, if all of you out there that are watching, if you want to join us on YouTube and join the conversation, make your comments. We'd love to hear from you. Also, if you could like, subscribe, and share, help us get this word out. If even if you don't agree with us, let people know that this information is out there. Because again, we're not trying to hype or FUD anything. We are just presenting facts and data. It's unbiased facts and data. And people need to understand the full picture of these assets that they're investing in, good and bad, if they're going to be successful and make a knowledgeable choice in what they choose to invest in. We're not saying we know everything. Again, that's why we want you all in the chat to correct us if we're wrong. But what we ask is the same standard we hold ourselves to. Please cite your source. If you're going to correct us, cite your source. We'll go to your link live. And if we're wrong, we'll add that, like Max. He added that privacy, that the XRP ledger has now. And I did not know that. And I'm going to add that to my thesis. Avalanche. I found out that they're looking at changing their tokenomics. I'm going to add that to my thesis. I don't own any Avalanche, but you need to evolve. You need to evolve your thinking if you're going to do well in investing.
Yeah, I agree 100%. So, Mike, we've got a couple of pieces of deep dive research that we haven't had a chance to go through yet. We've got Temple, we've got Cashen, we've got GMX, and we've got Tezos. So which piece of research do you want to start off with today?
Either one. Let's do, I want to do Temple and Cashen are the two that I want to do.
Awesome. So let's start off here with Temple. Alrighty. And so for anyone who wants to run through this piece of deep dive research with us, you can hop on over to the node.pro, click on Intel Library. This is all free. And if you want to talk about this stuff, you see this button here where it says share to source from. I'm just going to go ahead and post this in the community here. So for anyone who wants to dig into this a little bit more deeply and talk about it in the community, you can do that there in the community tab. We call it the source room. Okay, so Temple, is there a token for this, Mike? Is there any? No? Okay, got it. I'm just going to go ahead and hit play.
Institutional trading faces a structure.
Yep.
That's something I do want to point out about a lot of projects on Canton Network. They don't have a token, and I like that. Because what that does is, because all of them, the transactions burn Canton. So instead of them having their own token, that value accrues to the CC token.
Yeah. And so, interesting comment so far from Jamaican Yardy. I mean, I guess I hope Canton does well. Oh my God. Dude, this stuff is great, man. And look,
Keep going. Keep going.
whenever you type in all caps, that means that you're really getting your point across when you type in all caps. Let's go ahead and play this deep dive research.
Actual contradiction. Legacy architecture imposes multi-day settlement delays, while public decentralized finance subjects block trades to predatory minor extractable value. Legacy electronic trading networks on Wall Street suffer from liquidity fragmentation and fixed operational hours, trapping capital between execution and final clearing. Conversely, public Ethereum virtual machine protocols require complete balance sheet transparency. Every transaction is broadcast to a public mempool, exposing.
So just real quick, and this is to address one of the comments in the chat. We are not paid. We accept no money from any project, from anyone,
Ever.
Not just any
Ever.
project, anyone, ever. So the only way that we make money from this is if someone signs up for some of the premium calls at the node.pro or from, like super chats or whatever. So we don't get paid from any project. Just want to make that clear.
Institutional order flow to front-running and competitive intelligence leakage. Temple Digital Group resolves this dilemma by uniting the low-latency execution of centralized platforms with the cryptographic finality of a decentralized ledger. The platform achieves this by operating natively on the Canton Network, utilizing its privacy-preserving Layer 1 architecture to shield sub-transaction data. At its core, Temple utilizes a non-custodial central limit order book, matching buyers and sellers through a strict price-time priority engine. This allows for continuous 24/7 trading across digital assets, stablecoins, and tokenized real-world assets. By merging centralized matching speed with atomic on-chain delivery, Temple provides an execution venue that satisfies both institutional performance requirements and decentralized security standards. Deploying institutional capital requires predictable pricing. Public automated market makers are mathematically incompatible with this requirement when handling large block trades. This graph shows a constant product automated market maker.
Okay, so this is X times Y equals K, this constant product formula up here in the top right. This is what Uniswap V2 is. Okay, so full range liquidity provision. And this, I'm assuming, is going to be, this is like the reason why, if you're a big trader on Wall Street or some institution, you can't use an AMM to trade. Because the moment you come in with size, you're going to move the market against yourself. You can't do that. And I think that that's what Temple addresses here, is this problem.
The bonding curve dictates that price slippage increases non-linearly as trade size grows.
Right.
When a multi-million-dollar order displaces this equilibrium, it incurs severe transaction costs and subjects liquidity providers to impermanent loss.
Yeah,
This
you can't do
depth
that.
chart illustrates Temple's alternative, a deterministic central limit order book. The matching logic strictly limits executed quantity to the minimum available at a specific price tier. Institutional limit orders execute exactly at the specified price, completely bypassing passive automated curves.
Wow, that's a brilliant piece of technology there. And there's an interesting comment in the chat from Steve Jones. He's saying HBAR, XLP, or XRP, XLM, and SUI, and Canton is a small fish in a huge ocean and far behind. I would actually disagree with that comment because when we take a look at facts and data, it looks to me as though Canton is well ahead of HBAR, XRP, XLM, and SUI. When it comes down to facts, looks like Canton is well ahead of all of those competing chains.
This precise control allows market makers to quote tight bid-ask spreads without the risk of toxic arbitrage caused by delayed pool rebalancing. Predictable, deterministic execution math ensures that institutional capital can be deployed at scale without incurring structural slippage penalties.
Right.
Beyond execution math, institutions require absolute data confidentiality. Operating on a globally visible ledger is a regulatory non-starter for major trading desks. This matrix visualizes Canton's need-to-know sub-transaction privacy engine. It categorizes participants to control data exposure. A direct participant node involved in the trade has full, unencrypted visibility into order parameters and counterparty identities. whereas an external node is cryptographically blocked from seeing anything. This data minimization is enforced at the smart contract level using DAML 2.0 semantics, which
Hmm.
decompose every multi-party transaction into granular subtransactions.
Hmm.
Permissions are explicit. Signatories are entities legally required to authorize a state change, while controllers possess authorized operational choices within the contract. The architecture also defines observers. This role allows internal audit departments and regulatory bodies to monitor specific contract parameters without holding operational execution rights. Any market participant lacking these explicit entitlements cannot parse the details of the active order book.
Oh,
By
brilliant.
implementing strict cryptographic compartmentalization, the network eliminates public balance sheet transparency while preserving the auditable integrity of a decentralized ledger. Achieving decentralized consensus on transaction ordering usually requires validators to inspect the data, creating a paradox if that data must remain hidden. Temple
Right.
solves this through a decoupled consensus loop. Execution begins locally at the participant node, where the payload is sealed into an encrypted envelope, reduced to a hash string, and transmitted to the global synchronizer layer, a decentralized cluster of supervalidators. These supervalidators run a Byzantine fault-tolerant consensus protocol for one explicit purpose: to establish an absolute temporal sequence over the transactions. Because they process only metadata, the validators possess zero decryption keys. They have no visibility into asset types, execution prices, or party identities. This decoupled mechanism eliminates minor extractable value. Arbitrageurs cannot front-run or sandwich a trade if the order details are completely invisible prior to block inclusion.
Good.
Once sequenced, the ordering is transmitted back to locally entitled participant nodes at the validation layer. This equation formalizes the final step. The local node decrypts the payload and executes the DAML runtime interpreter to verify the signature authorizations and finalize the state transition. This ensures the structural integrity of the order lifecycle without relying on a centralized clearinghouse intermediary. Decoupling global transaction ordering from local state execution provides structural immunity to MEV while completely preserving sub-second local processing speeds.
Right.
We can see these theoretical mechanics applied in a live institutional block trade. This developer terminal displays the DAML institutional limit order template code, highlighting the specific choice logic block used to execute an order match. When triggered, the state transition instantly archives the original target contract, generating an active trade receipt. This facilitates a non-custodial atomic delivery versus payment settlement model. The primary quote asset for these trades is USDCX,
Right.
minted directly on Canton following a strict one-to-one escrow lockup on an Ethereum virtual machine chain. On the
Wow.
base collateral side, the order book supports tokenized real-world assets. This allows institutional users to match Depository Trust and Clearing Corporation tokenized U.S. Treasuries or Franklin Templeton money market funds natively against USDCX. The atomic mechanism acts as a failsafe. If either the stablecoin or the real-world asset leg lacks sufficient balance, the global synchronizer aborts the sequence. All state variables revert to their pre-trade values, ensuring no capital is ever locked in transit.
That's
Executing
atomic.
continuous
Yeah.
on-chain delivery versus payment eliminates principal settlement risk and standard clearing delays, significantly increasing capital efficiency for trading desks. The economic security of this infrastructure relies on Canton Coin, the native utility token governing the network. This differential equation models the dynamic burn-mint equilibrium framework that aligns transaction demand with infrastructure provider rewards. 100% of the Canton coin collected from node data holding fees and transaction bandwidth consumption is permanently
To
burned.
burn. Yeah.
This burn rate counters a dynamic minting function, which strictly allocates newly generated tokens to super validators for maintaining network consensus.
Now, the problem here is that Canton is still inflationary.
Yes.
But with further adoption, maybe one day it becomes deflationary.
As institutional adoption accelerates into late 2026, Temple is expanding its venue capabilities beyond initial digital asset pairs. The execution engine will integrate tokenized equities, physical commodities, and cross-chain yield aggregators natively into the spot order book. Furthermore, upcoming polyglot integration with the Zenith EVM layer will expand accessibility for Solidity developers while maintaining Canton's sub-transaction privacy guarantees.
So we actually interviewed one of the guys over at Zenith, And Zenith is pretty darn cool because it allows, let's say that you're an EVM chain developer or you're developing on Solana, you can then essentially port or migrate your dApp on over to Canton on a Zenith mainnet extension. So pretty cool.
Temple Digital Group provides a mathematically rigorous blueprint for capital markets, proving that institutions can achieve decentralized settlement without compromising performance, privacy, or security.
Awesome. That was interesting. So let's see here. How can we take a look at Canton's Temple? So it's Temple. Temple is building on Canton. So I'm going to go to cantonnews.org. And there it is. Awesome. So what do we see? You want to walk us through this here a little bit, Mike?
Yeah, this is the homepage. You got capital markets built on Canton, private and compliant financial market infrastructure for the world's institutions on Canton Network. You got SBI. You have, all the different people that are working with them, all their partners. Cumberland, a lot of big names on here. Here's their different products. So you can do spot trading, RFQ platform, request
for quote. Yeah.
Yeah. So request block liquidity from competing trading desks. You can bridge, move assets in and out of Canton Network, vaults, programmable institutional liquidity pools on Canton, and data and API. Let's take a look at these vaults. Unfortunately, it's not going to let us look. So we got technical capabilities, programmable capital deployment across lending markets, automated market makers, staking mechanisms, and tokenized securities with configurable rebalancing logic, responsive to yield curves, risk thresholds, and liquidity conditions.
So, Mike, basically what they did at Temple is they replaced AMMs. So, a big trader or an institution cannot trade against a liquidity pool because that trader will move the market against himself. Can't do it. So that's where Temple comes in. It basically facilitates atomic swaps with very little or negligible slippage, replacing the need for liquidity pools. So we've only got 35 minutes left on the call today, Mike. I want to run through Cashen protocol. So I've got it pulled up over here on my screen, Cashen. So it looks like this is a privacy preserving. Let's see, what is Cashen? Is there a token for Cashen?
I don't
think so. Okay.
Like I said, it seems to be a trend with a lot of these, Canton projects. Is the focus is on the Canton token, and giving value to that token.
And that was always a problem with a bunch of dApps. It's like all these dApps on EVM chains, SVM chain, Solana, SUI, etc. They all launched tokens, either governance or protocol tokens. And many of them, there wasn't really a use case for the token. It's just kind of like they had a token because, well, they've got venture capitalists who invested in their protocol, and those VCs needed some way to exit their positions. So it wasn't really like you needed a token for the protocol to function. And that's why whenever I see protocols launching on Canton that have no token, I'm like, great, because they don't always need a token. But when we do see protocols on Canton launch with a token, the tokenomics are always better than what we're used to seeing on EVM chains. So I'm going to go ahead and play this piece of deep dive research on Cashen protocol on the Canton Network.
Trillions of dollars in institutional capital are waiting to enter decentralized finance, but they are blocked by a structurally broken foundation. Traditional public money markets operate on a pooled model. Users deposit their assets into a shared smart contract, which inherently requires them to surrender legal custody of their tokens. This diagram illustrates the problem. Once tokens leave a secure wallet and enter a central contract, the capital is immediately exposed to reentrancy exploits, smart contract vulnerabilities, and the risk of cascading liquidation events. Tier 1 investment banks and corporate treasuries operate under strict regulatory frameworks. They cannot legally interact with protocols that force them to trade against permissionless, anonymous counterparty wallets. Simply adding a KYC verification layer to a public protocol does not solve the custody problem. To bring enterprise capital on-chain, developers must move away from shared liquidity pools towards a new architectural foundation. That foundation is the Canton Network, a privacy-preserving network of networks explicitly engineered to process regulated real-world asset settlements. Operating directly on top of Canton is the Cashen protocol, which functions as the ecosystem's primary institutional liquidity and credit execution layer. The protocol has quickly secured a dominant market share. As these metrics show, Cashen actively manages over 275 million Canton coin in live deals and supports more than 50 onboarded applications. Architecturally, Cashen functions strictly as a ministerial agent. It never absorbs principal credit risk, never acts as a centralized counterparty, and never holds underlying client capital. The protocol succeeds because it replaces the legal ambiguity and custodial risk of shared pools with programmatic, verifiable bilateral credit agreements. Unlike public protocols that incentivize liquidity by issuing their own governance tokens, Cashen operates entirely without a native platform token. Every transaction uses Canton coin. Regulated asset managers and corporate treasuries face immediate accounting friction and compliance blocks when required to hold unrated, speculative tokens.
Right.
Canton Coin operates on a burn-mint equilibrium model. Core infrastructure services, like transaction throughput and message synchronization, are priced in stable US dollars, but they are settled exclusively by burning Canton Coin. Instead of relying on the unpredictable, dynamic interest rate curves found in public DeFi, counterparties on Cashen negotiate bilateral fixed-term deals, which currently deliver a benchmark yield of 5.21% APR. This
Wow.
equation outlines
You know
the
what's
deterministic.
interesting? What's interesting about that is 5.21% happens to be, I believe, the current yield on the 30-year U.S. Treasury bond.
Math behind that yield. Accrual is tied precisely to the Canton Global Synchronizer's processing rounds, mapping the fixed APR against the principal amount every 10 minutes to calculate the accrued interest per round. To monetize the protocol, Cashen assesses a flat 10% platform fee. This fee is automatically deducted solely from the accrued supplier interest, meaning the borrower never pays a direct matching surcharge. By removing speculative token emissions and dynamic rate curves, Cashen provides corporate balance sheets with non-inflationary, mathematically predictable cash flows. On the demand side, we have to understand exactly why institutions are willing to pay a fixed 5% rate to borrow Canton coin. The answer lies in Canton Improvement Proposal 105, which establishes a long-term commitment framework for the network's infrastructure operators. Under this protocol rule, supervalidators are forced to lock up to 70% of their lifetime earned Canton coin. This mandate is required to maintain their operating tier status and governance weight. A parallel rule, CIP-116, applies to featured applications. These commercial dApps must maintain their own locked Canton coin allocations to secure operating bandwidth and priority execution queues. Executing outright spot purchases for millions of tokens immediately ties up critical operating capital on a company's balance sheet. Cashen solves this paddle inefficiency by allowing validators and applications to lease the utility of locked Canton coin from third-party suppliers for a fixed fee, fulfilling their network obligations without purchasing the asset directly. Borrowing demand on Cashen is not driven by speculative leverage. It is driven by hard-coded protocol mandates required for network survival and operational priority. For institutional suppliers, the critical question is how to provide this leased network utility without exposing their principal capital to smart contract exploits. Cashen answers this through a non-custodial, tri-party delegation architecture engineered entirely using the DAML smart contract language. Unlike standard Ethereum transfers, capital on Cashen never leaves the supplier's qualified custodial wallet, such as BitGo. Instead, the DAML contract simply
So BitGo is the custodian for that WBTC product, which is one of the largest Bitcoin derivatives.
modifies the delegation state of the tokens from available to delegated. Because they retain full custody, suppliers maintain explicit recall rights. They can initiate an unbonding workflow at any time if their internal liquidity requirements change. To protect the borrowing application from operational downtime, Cashen utilizes an automated substitution engine. If a recall notice hits, the protocol seamlessly searches the active order book to replace the capital with a new supplier. If substitution liquidity is completely unavailable and the unbonding period expires, the DAML contract automatically enforces a pre-agreed breach rate penalty against the borrower, requiring zero centralized intervention. This distinct state modification architecture successfully decouples the act of pledging network utility from the risk of transferring legal asset custody. The final barrier to enterprise adoption is commercial confidentiality. Public blockchains broadcast every transaction detail to all network validators, exposing strategic treasury movements to competitor exploitation.
Can't
Cashen
have
leverages
that.
Canton's sub-transaction privacy to guarantee that commercial deal parameters, including exact capital volumes and fixed APRs, remain strictly confidential between the participating counterparties.
Good.
This granular privacy control is a strict necessity for operating within stringent data protection jurisdictions and complying with regulations like the European GDPR's right to be forgotten. Token interactions are handled through CIP56, an institutional token standard that replaces standard ERC20 push transfers with a controlled offer and accept workflow. CIP56 embeds compliance directly into the code. It queries digital identity certificates to verify KYB status and cross-reference jurisdictional sanctions in real time. If the Oracle check fails, the transaction is atomically terminated. By combining off-chain legal certainty with on-chain cryptographic privacy and compliance, Cashen operates as a fully realized institutional trading venue. The Cashen protocol's long-term trajectory is directly tied to a massive underlying economic engine that is already accelerating at global scale. As global financial institutions settle more tokenized real-world assets on-chain, overall network throughput increases. This heightened activity requires validators and applications to secure larger locked Canton coin allocations to maintain their operating capacity. This demand is compounded by the recent Canton Network halving, which slashed maximum token issuance by 50% and heavily shifted reward distributions away from supervalidators and toward applications. The halving intensified the competition for priority execution bandwidth, turning Cashen's credit leasing markets from an optional optimization into an absolute necessity for ecosystem survival. Ultimately, the Cashen protocol successfully decouples consensus security from balance sheet illiquidity. Staked capital continues to secure the network infrastructure, while the underlying assets remain entirely liquid on institutional balance sheets. Moving into its Phase 2 roadmap, Cashen's structural mechanics will expand. The underlying DAML execution engine is completely asset agnostic. The platform is engineered to support any CIP56 compliant digital asset, extending its capabilities far beyond Canton coin delegation. Wrapped institutional assets, such as Circle's USDCX stablecoin and CBTC, are rapidly achieving deeper institutional distribution through qualified custodial integrations. Cashen will integrate these standardized assets to transition its settlement mechanics entirely on-chain, automatically executing monthly interest invoicing at the close of each billing cycle. The long-term trajectory applies these multi-asset capabilities to introduce advanced financial services, including structured fixed-rate credit derivatives and algorithmic
Wow.
substitution pool surcharges. By
Amazing.
solving the core problems of custody, privacy, and compliance at the protocol level, Cashen establishes the architectural foundation for an automated, privacy-preserving interdealer credit market.
Wow. That's so cool, man. This is really, really looking like a great ecosystem on the Canton Network. It really is. I mean, some of these products, these are advanced derivatives products that you would only see offered by an investment bank like Goldman Sachs or something like that. But will this stuff become available to retail? Hopefully. I would certainly hope so. I think that it's probably going to be, gate kept a little bit. You'll probably have to pass some KYC, KYB. But man, super interesting, Mike. This Canton network is growing quickly. And if we take a look at Canton Scan real quick, this is something that we have to continue to put out there, though. That burn mint. So the burn mint is basically in a range, okay? So this range is from between 0.50 all the way up to 0.83. So that's the range that the burn mint equilibrium finds itself within, basically since, what was the date there? Basically year to date. So year to date, it's between, let's call it 0.5 to 0.8. This needs to break out to the upside. I think that if this breaks out to the upside, then we might see CC, the token, the coin, we might see Canton CC push higher. As of right now, though, we're going to call it how we see it. As of right now, when we take a look at CC, it's in this descending channel. And it's in that descending channel likely because the burn mint equilibrium remains below 1.0. So if we get that BME up above 1.0, it would likely mean much greater network adoption, and therefore the token becomes deflationary, but it's not deflationary yet. So I'm just thinking to myself that a decent entry might be at or below 10 cents, currently trading 11.6 cents. It's off 4% on the session today. So let's go ahead and let's run through some charts just real quick over the next couple of minutes, because there's been a lot of price action over the last couple of sessions here for digital assets and for TradFi assets. I mean, man, if you take a look at some of the stuff in TradFi, it has been moving all over the place. Now, I want to point out BTC here. This pattern, this is an expanding wedge. And this rising, expanding wedge, that's a very bearish price action pattern for BTC. If we zoom in here to the hourly, we'll be able to see that Bitcoin actually broke down. It fell out of that wedge to the downside. And as it fell out of the wedge to the downside, what your expectation should have been was, okay, we got the breakdown. This is breaking down below that level of trendline support. Then we should have gotten the retest. We did get the retest and pushing back up above what became resistance. So this is going to be an important zone to watch, that 63K level for BTC. I'm going to zoom back out one more time. Let's take a look at ETH now. So here's Ethereum. Ethereum also lost its level of trendline support. You see that? We got a breakdown, and Ethereum has actually been on the session today outperforming Bitcoin just a little bit. But if we take a look at ETH on the hourly, there's the breakdown. See that breakdown? Now we should expect that ETH will retest that breakdown level. That breakdown level comes in at 1880. So I would expect there to be some type of a retest of the 1880 level. And I think that it probably does not break out above 1880. The reason why is, let's take a look at ETH in Bitcoin terms. So ETH in Bitcoin terms, again, this is an hourly chart. Notice the level of support. This is the 200 period moving average on the hourly. Now, the level of resistance above, this is a long-term level of resistance. It comes in at 0.030. Now, this level of resistance dates back all the way to the all-time high for ETH in Bitcoin terms from 2017. That was the ICO boom back in 2017. That's the anchor point. Now, this is a long-term level of resistance. I would expect this to not get broken until we see a real Bitcoin bear market trough and the start of the next bull. I do think that this is going to break out to the upside, though. I think that this level of resistance will get broken. I think that ETH will break out in Bitcoin terms because ETH is much more useful than Bitcoin is. But I don't think that that's going to happen until we get a fresh bull market. So that makes me think that this level of support down here ends up failing, and that would mean that ETH underperforms Bitcoin on the way down throughout the rest of this Bitcoin bear market. I want to go ahead and zoom out here to a daily. Let's take a look at a couple of other alts. Here's Solana.
Really quick, Jamaican is asking, what is the resistance level for Canton?
Sure. So the resistance level for Canton comes in at, and we can see this, you see this channel, Jamaican and everyone? So this channel that Canton has been in basically since the beginning of June, this channel here, resistance comes in at, let's call it 12.2 cents. So 12.25 cents. That's the level of resistance. And that level of resistance moves lower the lower price goes and the more time passes. So yeah, Canton remains inflationary, and the level of support on the downside comes in here at 10.6 cents or so. So
like we said, Jamaican, we don't hype, we do not FUD. We give you facts. As bullish as we are on Canton, we're going to be honest about it. So we're not just beating up XRP. We are like this on every single project we talk about, and that's why we don't get paid. That's why we do not accept payment of any kind from anybody to talk about a project. Is it allows
that's
us
exactly right.
It allows
We
us to
maintain our objectivity. Yeah.
Yep.
So if we take a look at Solana, now this is a daily, and what I've got marked here for Solana is this 200-day moving average. If Solana was able to rally up to that, that would have been a great opportunity to get short. Now, the most recent rally out of Solana, it was actually the first major to start to put in a rally, starting from the beginning of June. But that rally has really tapered off. And these highs, this is just a series of lower highs. Now, the level of support for Solana comes in at, let's call it $71.50, $71.50. If that fails, I think Solana makes a move down to $60 again. And I would expect it to move slightly lower than $60. I'm going to be buying Solana at some point this fall, but not quite yet. Let's take a look at Tron. Okay, so Tron on the daily. Now, we've run deep dive research on TRX, and this actually has a really decent value capture model. The mechanism here for capturing value actually works. Let's go ahead and zoom out here so we can take a look at the performance of TRX on a weekly, because this has actually been one of the best performing digital assets in the entire digital asset space over the last 5 or 6 years, which is like, okay, you can't ignore this then. Now, this, if we take a look at this pattern, notice you've got the all-time high on that wick higher. This is the next lower high, but here, this is a slightly higher high. So what that tells me is if TRX puts in another rally up above 37.8 cents, I think it makes a run back up towards 45 cents. So I actually happen to like TRX quite a bit. If we take a look at BitTensor Tau, this is again on the weekly. So BitTensor Tau, a little bit less certain. We should probably run some deep dive research now that they've updated their tokenomics over at BitTensor. But, if I'm just taking a look at this, what I see here is we've got that high, we've got a lower high, we've got another lower high. This is a series of lower highs. We've got a low and a lower low. So I think that BitTensor Tau remains in a downtrend. And that tells me that, hey, if Bitcoin makes another move lower, then BitTensor Tau probably makes a move down to 143. Let's take a look at HYPE. The HYPE token off 4 percentage points today. Let's zoom in from a weekly to a daily, and let's take a look at this thing. So the fact that it was unable to break out above that $78 or $80 level and got rejected up there twice and then put in a slightly lower high and now has sold off, it's finding support at what you could call this just like horizontal support. You see that there? So that's a little bit of a double bottom. So we've got the 200-day moving average below at $45. We've got trend line support slightly above that 200-day moving average coming in at $50. And then we've got this horizontal double bottom coming in, let's call it at the mark price right now, $53.50. So Hyperliquid has a lot of regulatory risk, unfortunately. So that Clarity Act, we got to see what that language looks like. It might not be good for HYPE. Let's take a look at BNB. So BNB put in a nice rally yesterday, but this one so far, if we zoom out here on this daily, that is a big parabola. BNB was one of the only digital assets to really put in a parabola during the last bull, one of the only large caps, to really put in a decent parabola. But it's given most, if not all of it back. And I would not be surprised if Bitcoin makes another push to the downside. I would not be surprised to see BNB lose its 200-week moving average, which comes in at 534. So if that 200-week moving average fails for BNB, I would actually be a buyer at or below $400. Let's go ahead and wrap things up by taking a look at some of these ISO coins, which I know are so popular. XRP. Okay, so XRP. We've got to begin by zooming out here. This is a weekly. And let's just see what we see on the weekly. So number one, this 200-week moving average, XRP is trading below its 200-week moving average. Okay, that's bearish. Let's zoom in from the weekly to the daily. And let's take a look at the daily. XRP is trading well below its 200-day moving average. Again, very bearish. Also, that October 10th flash crash low comes in at $1.25 for XRP. XRP is trading below its October 10th flash crash low. Let's zoom back out one more time and let's just see what we see here. So big move to the upside. That was, back in October of 2024. This is not a healthy pattern. So the big push to the upside and giving most of it back, trading below that 200-week moving average, my expectation here, just based on the pattern, is that XRP makes a move down towards 76 cents. That's where the next level of support is. And why did I choose 76 cents? Well, because you've got resistance here once, resistance twice, and then this big breakout. So this level of resistance flipped and became support. I would expect that XRP will test that support once more. And if that support does not hold, if that 76-cent level does not hold, well, then XRP would re-enter this large trading range between, let's call it 30 cents and 75 cents. So it needs to hold that 75-cent level in order to, not risk pushing back down towards 30 cents. Let's take a look at XLM USDT. This is another one of these ISO coins. And, as of right now, Stellar, this pattern here, these big pumps and dumps, this is a really unhealthy looking chart. Now, if we zoom in here a little bit on this weekly so that we can just see this, it's also trading below its 200-week moving average. You see that 200-week moving average right there? That's the white line. So Stellar trading below its 200-week moving average. If we go ahead and zoom in from the weekly to the daily, it is also trading below its 200-day moving average. So Stellar below the 200-week and below the 200-day moving averages.
I'm curious because I'm not. I never claimed to be a TA guy or a trader. So I'm kind of curious. Like Moneymaker made this comment: trending below the 200-week is bullish because every time it does, then it explodes up. Is that factually true?
No. Trading below a significant long-term moving average is not bullish. It is not. It is definitely not bullish. You want your asset, if your asset is in an uptrend and trading above important moving averages, then a retest of an important moving average where it holds that moving average, that's bullish. But trading below an important moving average, if there is a retest of that moving average, you should expect it to get rejected. So trading below an important moving average is bearish. Okay, so XRP, XLM, why don't we take a look at like HBAR or something like that? Another one of these ISO coins. And, so HBAR, again, trading well below its 200-day moving average, trading below its October 10th flash crash lows. If we zoom out to the weekly, from the weekly, we can see a little bit more data here for HBAR. And we also see that it's trading well below its 200-week moving average. Now, if I zoom in here, this is interesting. And this illustrates my point about these moving averages being important either levels of support or resistance. So take a look at this, you guys. Right here, back at the end of May, HBAR rallied up to its 200-week moving average where it got rejected. So trading below an important moving average means that if there's a rally back up to that moving average, you should expect it to hold as resistance. It's exactly what happened here for HBAR. It got rejected and pushed sharply lower. In fact, by a further 40%. from that 200-week moving average to the downside. And in fact, there is no support here for H bar until it gets down to 3.8 cents. So that's basically getting cut in half from where it's currently trading. What's another one of these ISO coins? How about something like Cubic, right? We took a look at Cubic.
Quant.
Yeah, so Cubic, I mean, just trading at the all-time lows is this thing. This is a really unhealthy pattern. So yeah, I would expect this one to make a move down towards zero. There's some solid support at zero. How about Quant, QNT? Let's see here. So if we take a look at QNT, this is on a weekly. Let's just zoom out on this weekly so we can see all of the data. And look, like trading well below its 200-week moving average, which comes in at whatever that figure is, 97 bucks. So well below the 200-week moving average, and it's got support down there at $42. So yeah, not looking good. And why don't we take a look? The last one. Why don't we take a look at Zebek? Because that's another one of those ISO coins. Yeah. So Zebek, what's the symbols for Zebek? Is it ZBCN? I think it's ZBCN. Yeah.
I think
so. Here's ZBCN. Okay, so it looks like not quite enough data to draw a 200-week moving average on here. But what I can do, because this is one that I don't normally take a look at, is we can take a look at that all-time high up there back in May of 2025, and then we can drag a level of trendline resistance down. Okay, so now we've got resistance on the downside. Awesome. And then let's go ahead and grab a horizontal. And what we're going to do is we're going to throw down support on the downside. There we go. So we've got resistance if there's a push higher, and we've got support on the downside. So, I mean, this pattern, if I want to be a little bit more generous, what I can do is I can say, okay, well, support, the first level of support actually comes in a little bit higher. So Zebek Network, ZBCN, it's got support down here at 1/10 of a penny. So 0.00149, that is support on the downside. Resistance on the upside comes in at 0.0027. Let's zoom in from the weekly to the daily, just so that we get a little bit more, a different perspective here, and a 200-day moving average. So check this out. That 200-day moving average comes in well above the current mark price for Zebek Network, ZBCN. So trading below the 200-day moving average is bearish, okay? And that level of support actually comes in just a little bit further down. So, I would expect that this thing would likely make another move to the downside of roughly 20% before finding any type of support. If it rallies, well, then, you would have to see this thing rally by like 40% before it finds meaningful resistance. So this is not bullish, okay? Especially since Bitcoin is still in a bear market. We're still well within this Bitcoin bear. So I want to allocate to higher quality digital assets where the patterns don't look completely broken from a technical analyst perspective. And that's, I am a technical analyst by trade. I've started doing this work in 2010. So, when I was in my early 20s in a dorm room at University of California, San Diego. So I just, all those digital assets that we just took a look at, all those ISO coins, those patterns, they all look similar and broken. And that's likely because there's no value capture for any of them. And we've run deep dive research on most, if not all of those. I think we should probably do some deep dive research next week, Mike, on Zebek Network. I don't think that we've run deep dive research on that one yet. But yeah, man, I think what you need to focus on is our trifecta. You need to be focused on users and user growth. Those users need to drive real revenues, and those revenues need to accrue to you, the token holder. You got to focus on the trifecta. All the partnerships and press releases, that stuff doesn't matter, man. It doesn't matter at all. What matters is Are
It
it doesn't. It
it
doesn't.
it does. It does. I mean, it's because I mean we see it all the time with meme coins. We see it with XRP. I mean, there is value there if you're a trader. If you're going to trade, the volatility, to buy the rumor, sell the news. There is value there. As an investor, I would agree. No, it doesn't. But if you are a trader, yes, you can trade emotions, you can trade mind share, you can trade all of that.
Yeah, I don't know, man. I think that the most important thing when it comes to these digital assets is making sure that there's some there.
Oh no,
Like,
absolutely.
yeah,
No,
yeah,
absolutely. I'm just saying that there is value, but yes, what we focus on in the trifecta is long term value, real value. Where
right.
it's the same way that businesses are evaluated, traditional brick and mortar businesses. If you ever watch Shark Tank, listen to the questions that they ask. They ask what was what was your sales, so what was your adoption basically. When they talk about software, if it's an app, they always ask them, how many people have downloaded your app? What's your adoption? That's your customer base. What was your revenue? What money did you generate last, like this past year? What was your operating costs? Things like that, because they're evaluating. There's like a whistle. They're evaluating the company. And the thing that we added for crypto assets, because the only way that we can invest in these companies, their products and services, is through the token. Because unless they have a stock, and if we're buying these tokens, we need to understand what connection does the token have to the fees and revenue or the overall success of the company. And if it doesn't have value capture, you are buying a speculative asset that you are gambling on, that a bunch of people are going to buy it for more than you did so that you can use them as exit liquidity. That is the blunt truth of it.
So yeah, man, and look, we've got a lot of people on the call here today, and I really want to thank everyone for joining this call live. We really do appreciate all of you guys, and if you got some value from this, the best way to support us is over on YouTube. Like, share, subscribe. But if you want to hop on over to the node.pro, that's our official website, we do have a bunch of premium offers that, hey, you know what? If you want to be able to hop on a call with me every Monday, Wednesday, and Friday, we've got an offer for that. Or if you want to hop into the Intel library, and every Friday, I produce a weekly Intel overview, which is every single piece of deep dive research that we've produced during the week. By the way, 10 pieces of deep dive research every week. Every Friday, just after 5 p.m. Eastern Standard Time, I turn this into an Intel overview, so you can run through and consume all of that deep dive research that we produce every week on Friday. That's $10 a month. So it's definitely worth taking a look at. And then if you want to chat with us, hop on into the community, man. This is where you can, talk everything crypto, DeFi. And we've got a big growing community in here. And this is totally free. And by the way, I'm turning this into a mobile app. So it'll be like, think X plus Telegram, like merged into one app, but just where we focus on the deep dive research and all of the educational content over here in DeFi University in the node. It's all free. So all of the educational content in here, if you want to run through DeFi University, let's say that maybe you want to learn a little bit more about perpetual futures trading. Well, you can click through and you can play all of this content about perpetual futures trading. There are 15 lessons in here, all with podcasts, video overviews, images in here if you don't like reading. Or maybe you can hop into the exercises, or you can take quizzes.
I was in the Marines. I like pictures.
I like pictures too. So, and all this stuff is free. We give it away. So like, share, subscribe on YouTube. Thank you so much, everyone, for joining. This has been a great call. Really do appreciate you guys. And that's all I got, Mike.
And join us tonight for Crypto Trenches. So we rebranded Crypto and Chill, Crypto Trenches, and it's where basically, me, David, and Jeff, and sometimes we have guests, and it's basically where we fact check. We fact check ourselves. We fact check other content creators. We fact check, just everything, and make sure that people are getting good quality information with cited sources, and trying to weed out, the noise, because there is plenty of noise in these markets. So join us for that. It's if anything, it's entertaining. So with that, appreciate you, David. Appreciate the chat. Thank you so much, Moneymaker, Jamaican, everybody in the chat. We greatly appreciate the comments and the back and forth. That is why we are here. We are here to see all points of view, but we need to understand and we need to separate what is feelings and personal opinion and speculation, and what is data, facts, and actual alpha. So with that, we appreciate y'all. And until next time, Veteran Crypto out.
Peace.